Welcome back. Let's get a hint of how this market picture has looked then this Friday to kind of close off the week. Some positivity then across the board for the Asian counters there. It does seem that things are perhaps faring a little bit better, especially considering the Asian policymakers' decision on that front to try and find a way to work back against the United States, of course. So keen questions around that. More than 0.75% gained across the board there for the main indices out in Asia then as well, including the Shanghai Composite moving higher. Mostly positive picture for the European market, even if it is only just for the DAX, which sits 0.01% to the good. It's 1% higher off there. The CAC 40 has only just lost 2 points then as well. And as you can see, it continues to filter between red and green there. So some positivity still on the board, but only just at present. On the local index, 0.33% to the good then for the JSE All Share above that 56,000 point mark today. One of the big gainers seem to be platinum miners, but juxtaposed with gold mining shares, it does mean that resources are able to gain, but not as much as perhaps they would have liked. Sharing the sentiment of the overall market, though, only rising around 0.33% there at this point in time. Financials are weaker, 1.25%, led primarily by those banking counters, which are 1.5% in the red then as well. Also some red as well for the South African property listed shares as well, even if it is only just industrials managing to tick higher. That is bound to be the reason for the main uptick as well in the market. HCI and Cartrack gaining more than 4% today as well, so some good pictures for them. While Robex, Tsogo-san and Hospitality, including City Lodge as well, unfortunately all going down quite massively as well today. And the impact of that, of course, still hurt by the tourism and lack thereof here in the country. Over to your commodities. Back below $40 a barrel then is the oil price, down 0.25% at present. Still a lot of issues around whether when OPEC meets next week Friday, whether they'll be able to suss out what they want from the market. Of course, increasing demand does mean that they'd have to bring the price down quite substantially. Yes, good news for South Africa, but you can imagine that the oil exporting nations, particularly in Africa, the likes of Nigeria, may indeed suffer even more, where their economic picture has been dire and faces quite a bit of a recession as well because of the oil imports that, or rather oil inflow that they haven't been able to get through with regards to funds there as well. 0.33% weaker as well for the gold price. It now sits mid 1900 as well. So quite interesting on that front. Not much to really speak about there. But the platinum price, 0.2% stronger so far this afternoon, $932.40 a fine ounce there. In your currencies, stronger is the local currency, 16 Rand and 73 cents against the US dollar, nearly 1% stronger this afternoon then as well. So hopefully some of the losses made, of course, throughout that time when the GDP figures came out has certainly been wiped away ever so much. But of course, we did get the mining and manufacturing data come through yesterday for July, which is the beginning then of the third quarter. Yes, it was down, but it does show that a rebound is in fact in play, and perhaps things will start to improve, of course, as the restrictions on the lockdown here in South Africa did begin to ease off ever so slightly. With regards to the euro, that's also strengthening. The South African currency is strengthening against the euro. That is 19 Rand 84 cents for a US dollar. If you have 21 Rand and 46 cents, that's how much a British pound will cost you. Warwick Lucas, Galileo Capital, joining us now as we unpack this market picture. Warwick, thank you so much for the time. Appreciated. The oil picture back below $40 a barrel. Any surprises, really? I mean, where's the new normal here?
Good afternoon, Arabella, and to the viewers. Well, I think with oil, there's at least a surprise a week. I would say in the case of this week, it would be the outcome of the hurricane season in the US. The US finds itself with much larger inventory and stock positions than expected, and I think we could probably describe it as a week as well, at the tail end of which we are definitely doing a zag after some quite big zigs. So I think it's no different whether we're talking currencies or oil prices.
Yeah, and I suppose OPEC meeting next week is going to be quite important as well, considering that they need to decide whether they want to up demand, of course, having seen them cut demand not so long ago, or whether they're going to keep things the same and, in fact, perhaps even cut more supply to the market as well. Does that hurt them quite substantially if they continue to just cut demand? Because to cut supply, that is, because clearly the market is not really looking out for too much more of this Brent crude they keep slugging into the market.
That's right, Arabilia. I mean, they basically create an overhead problem for themselves in the sense that if they cut too much supply, it does bring new supply back into the market, and frankly, a lot of those shale producers have really shuttered themselves, and any kind of hike in prices does give them the opportunity to be able to either start operations again or to sell forward, and to be able to lock themselves back into the market on a sustainable basis. So OPEC needs to be very careful about how it plays its hand.
Going to be very interesting on that front. Also, the local currency is strengthening today, but it's still 16.75 odd. That seems to be the tight range within which we're going to find ourselves trading in for this local currency. Any hopes of getting it better, or is that going to properly depend on how quickly we can recover from the pandemic?
Well, it looks like the currency is balanced at this stage. I mean, we obviously see the usual oscillations between the dollar and other major currencies at the moment. Dollar making up a little bit of ground. But of course, South Africa quite getting over its initial fright from the GDP data, which was a little bit worse than expected, but frankly not a hell of a lot. And to be honest, I mean, GDP data, especially in a kind of shock environment like this, is going to be very noisy anyway. So I think there's a sense of normalization there, and you could actually see it in the strength of those SAPTY stocks during the week, and particularly the banks and so on, that a feeling that, yes, it has been terrible, yes, earnings and the economy have been very hard hit, but we are also finding some kind of a bottom here that we can build from.
Yeah, that bottom is going to be very interesting to find off as well then. All right, very generally this week we also saw some company news, the likes of Capitec, of course, have reported of late. And I wanted to really touch on these banking counters, which have seemingly suffered. This was a health crisis that impacted banks quite significantly. Those falls could be quite big. And I mean, the trading statement out of Capitec means that they'll be the second biggest loser in terms of earnings and their returns for the year when taking into account the coronavirus. So credit impairments really getting hammered.
Absolutely, and I think we can also see it from a small company called Sasfin with their trading update out today as well. I mean, we saw their credit loss ratio going from 110 basis points to 300, but all of these banks are basically looking at the immediate environment, saying, right, well, there's been some job losses. We have to put a line through how many of our loans are good, and then see what's left after that. Now, it basically looks though as if the sector has basically taken its worst. It survived. It's badly hurt, but it has survived. And if one then looks forward 1 year or 2 years, I mean, we can see basically earnings coming back to where they were in, say, 2019 in the year 2022. And on those bases, the valuations are incredibly low, and the market can look past that and say, well, they probably will survive, or most certainly they will survive, and the recovery when it comes makes these stocks particularly cheap. So it's starting to look as if risk and reward is back in balance.
I mean, even FirstRand yesterday pointing to that very same picture as well. Warwick, appreciate the time, though. Thank you so much for joining us this Friday. Do have a lovely weekend. Enjoy yourself, and hopefully we'll chat again very soon. Warwick Lucas from Galileo Capital. So the market picture is slightly positive to end off the week. Hopefully it closes out that way. Will be quite interesting. But next week, Tuesday, is the start of the South African Reserve Bank's Monetary Policy Committee meeting, where another decision will be made on whether the bank will cut interest rates by the very least another 25 basis points. Now, that estimation does come from Bloomberg, where at least 13 economists do expect another cut in interest rates of 25 basis points. It would be a total of 325 basis points cut from South Africa's interest rates. Now currently sitting with a prime lending rate, should I say, of 7%. South Africa certainly will be interesting, whether that will aid us in our growth picture or will it just get South Africans into debt. We'll see how things fare next week. Of course, I'll join you for that. But for now, though, my colleagues will join you after the short